All right, guys, welcome. And this is going to be another breakdown or another trade breakdown for this past week's trading. And today I'm just going to be breaking down the euro dollar long position that I was taking, which was posted on the channel and called on the premium channel. Now, um, I'm going to just try to break this down in the simplest of ways. As you can see, the previous week, I talked about this particular trade right here where we went long for euro dollar. And we had two trades, and here was the second one to take out these highs. Okay. And going forward, we looked for another entry, or we found another uh, opportunity for this particular pair. If you look and you break this down on the 4-hour time frame, you find out that we were looking at a really huge point of accumulation or consolidation in that particular marketplace. And if you break that down on the 1-hour time frame, here on the 1-hour time frame, as you can see, this was the previous week's trade that we had right here. The very first entry, second entry, and the second day. Now, after that, price went into a consolidation for Friday's trading. And I think that's Friday. Okay, but the following day, we saw price trading into a consolidation. And look at what happened next. So now, as you can see, I have this area of consolidation marked, or that particular zone. And these are the areas where we get demand or supply being produced in the marketplace. And in this particular case, we have an accumulation. If you want to look at that from any point of view, there are certain things that I look for. And after that consolidation, we had a break out of that particular zone. But this wasn't a major break. Okay, as you can see, and it got mitigated. This was that major break right here, the major break out of that zone. And we saw another mitigation at the order block or that demand zone, and price traded higher. Now these are opportunities that would be that presents uh, you know themselves as price trades higher. Now upon hitting that particular high, it began to trade lower. It traded lower back into that area. It traded back into that area and gave us a really huge rally to the upside. It took out this highs, these high, and this other high. Now on the return, let's go back to the 4-hour time frame. This is pretty much self-explanatory and pretty much straightforward, but I like to break a few things down. If you look at the 4-hour time frame, you may not see a lot of those details that we found on the 1-hour time frame. Now on the 4-hour time frame, we have this particular demand zone or order block created after the move. Okay, now we saw price return in there to mitigate. Now this time it trades into it, gives us a really huge reaction to the upside, a really huge reaction that takes out this high, takes out this high. Now on that return, that was where FOMC, we had our entry. So we were looking for an entry just around this box and all the way into this area. So just around this area all the way down. But it would have been, a bad idea to, take entries just at the top right here because it's an auto block. It would have been a bad idea because we have this right here. It was a range on its own. Okay, so if you divide that range into two places, I'm going to start from here. and extend that out. Now, if you divide that range into two places, you're going to find something. Okay, I'm going to use the top of that candle. Okay, and all right, let's just use the body of the candles. I'm going to use the body of the candle, and pretty much the same thing. Pretty much. So we're going to settle with the week because we're trying to look for range. So if we divide this range into two halves, you're going to find something. You're going to find that we have one half and the second half. So price is going to deep in to as low as possible to get the best price that it can capture before trading higher. Now, if not for uh, FOMC, that macroeconomic news release that we had, we wouldn't have seen this particular spike or this particular decline in price or spike in price to the downside, but back into this demand zone. So, a little bit of craziness is allowed when we have or when we see or when we expect high impact macroeconomic economic news events. So this would have been the area to look for, the second half all the way down and this area. But we wouldn't have been expecting price to react to this area had it not been for the FOMC release. We'd be looking for a reaction just around here, and that was what we would have seen. Price would have traded higher from there up until this point before FOMC and its craziness kicked in. So we're gonna go to the let's go to the 1 hour time frame. I'm gonna leave that there. Now going to the 1 hour time frame, we have that very first area, and this area is a strong zone that tells us that we're not going to see any price break it. Okay, break it into this area, and if it does, it won't go below this. So price, this would have been the area for me to expect that to be a terminus before a rally, if not for the FOMC release. So, but because of that, we saw price, reacting, and I had an entry just around here. As you can see, if you wanted to see all of that, you can go to the group. And this was actually called in the premium channel, and price traded back in here. So I got stopped at break even on most of those opportunities or most of those entries, apart from these one. I had to drag the stop lower, and it traded back in and rejected and headed out. Now, these are the things that you'd expect. Some craziness like this because of a high impact news release can actually affect your orders. It happens. And if that had not been the case, we would have seen this area holding and trading higher. We wouldn't have expected to see price this kind of craziness. But I want you to understand that when you see high impact news events, they would actually validate the bias, and they would just validate, or they'll just add fuel to the fire and move the market in the direction that it was supposed to move to originally. But we could see a little bit of a displacement before that, and that's what we found here. A little bit of a displacement could happen. Okay, so that displacement went back into this original demand to capture more orders, before heading out. And here, this was a target and that was for 108 pips, but it actually targeted and went above that and gave us 120 plus pips. So starting from here, a consolidation, when the market is in consolidation, here's one lesson. If you do not learn anything from this breakdown, you can learn this. the market is in consolidation and you understand where it's going to go next, it's, excuse me, it's basically a done deal because we have a consolidation. The market will go into a rally, or we would see the market decline after a consolidation or an accumulation or a distribution. Now, in this particular case, this was an accumulation. That's a Wyckoff accumulation right there. It meets all the requirements. And this right here was the demand area created by that particular accumulation. So we saw the market reacting to that multiple times, before trading higher. And going into the new week, I'm going to continue to look for longs, but earlier in the next trading week, we could see a little bit of a correction into this zone or deeper down before we see price head lower. So that's head higher instead. uh, I would expect to see a little bit of a correction, and then we could head higher. But I'm here to trade whatever the market gives me and whatever I find in the marketplace, and that's just it. And I'm going to be uh, looking forward to the next week. So basically, that's it for today. I hope you have learned something new, and I'll see you later on.